Okay, two words about us. I know most of you already been to our events, and this is Mark McNamee, a co-founder of Ukraine Business Network, UBN Network, and I'm Andrew Prima, a founder of Ukraine Business News since 2018, and most of you are reading our morning economic digest. Unfortunately, after 6 years, for sending news for free, we're not free anymore. That's the reality. So we have a team of 20 to feed, so we had no choice. So two words about myself. I'm Ukrainian American, spent 20 years living and working in the United States, graduated with MBA degree from top private schools, and spent the last 10 years working in New York for top financial firms, and decided to return to Ukraine in 2021, exactly 7-8 months before the war. And I think this is where I belong to. And despite the war, we continue doing business, and we actually started the UBN network, and we're proud of that. We're not afraid of what is happening. And I think this is the right time to put our brand out there. So just in two words, UBN, Ukraine Business News, publishes news in 7 languages. By the way, yesterday we're proud, we signed a contract with European Commission. 75 members of European Commission are our readers. So this is big for us. About 25 embassies reading our news, and approximately 60-70% of our readers are international companies. This is right now. I would like to announce our new subscriptions. So we have daily news, 22 days, 22 issues per month. It's only $10, and if you'd like to subscribe for a year option, it's only $99. And for corporations can sign up for $5.99 for up to 50 people. So, for example, European Commission signed choose the plan up to 100 people. So we are actually the second package. We have UBN News and UBN Network reports. So it includes 20 reports, and it's $999 per year, and the corporate rate is $1,500. And UBN Network annual membership includes everything that I mentioned above. It includes UBN News, it includes all the reports, and it includes 2 private meetings a year. It includes live events, so pretty much what UBN brand, UBN Network, and UBN News can offer includes in our membership. We're already happy to have several members joining us in the last 3 months. So already said, for live events, all the reports and network and insights, and actually also what we're doing, we're connecting businesses. So we have so many companies coming to Ukraine and asking, oh, Andrew, what's the company we should work with? What's the best law firm to work with? What's the best accounting firm to work with? So we connect in those businesses, and this is actually going very well. So we want to be a one-stop shop to help businesses to land in this country. So, and this is another important thing. So, by the way, you understand it costs money to have such a lavish events, right? With the food, and this time with drinks. So, this time I would like to, by the way, did you see those gifts from Piraeus Bank? So if we lose the power, if you want to take more pictures, please plug in the Piraeus Bank power bank, you'll be all set. So a big thank you to our general sponsor, Piraeus Bank. Despite the war, the Piraeus Bank team supports us and helps to have such a beautiful events. I would like to give a stage to the head of business of Piraeus Bank, Maxim Reznichenko, to welcome you at our event. Maxim?
Добрий день, шановні гості, шановні партнери. Від імені Piraeus банку, який є сьогодні генеральним спонсором, я хочу привітати вас. Сьогоднішній івент дуже важливий для не тільки... може ви не чути? Сьогоднішній івент, він дуже важливий не тільки для енергетики країни, але, я думаю, для всієї економіки. Ну, 2 слова про Piraeus. Piraeus банк, ми частина міжнародної фінансової групи більше ніж 100-річною історією. І останні 15 років банк успішно працює в Україні. Коли почалось повномасштабне вторгнення, банком було прийнято рішення, що ми будемо продовжувати працювати в Україні. Це підтверджується тим, що ми за останній рік розширили свою географію. Ось ми відкриваємо нове відділення, тому ми завжди з нашими клієнтами, з корпоративними і фізичними особами. Ось, оскільки сьогоднішня подія дуже важлива, я бажаю всім нам плідної роботи, вважаю нових партнерств і щоб це в нас виходило. Слава Україні!
Thank you, Piraeus Bank. So Piraeus Bank is, despite the war, expanding their branches. So they're opening new branches, and this is, I think, a big thing during the war. By the way, when everyone is saying that everything is so awful in Ukraine, did you see the profits that banks are making? So not everything is that bad. So also, I would like to say a big thank you to our partner. And our next sponsor of our event is the brand Gamondi. So it's Italian brand of premium aperitifs, vermouth, and liqueurs from which you can prepare world-famous cocktails. So after we finish with the official part at 4 o'clock, Gamondi will treat you with incredible drinks. So please don't run away. Gamondi. So, okay, we're going to get to UBN economic outlook, and I would like to welcome Mark McNamee, is my business partner, former managing director of Europe at Frontier View, specializing in CIS markets. His works were published, his articles were published with Harvard Business Review, interviewed on TV by BBC, Bloomberg, Forbes, Wall Street Journal, and many others. He taught a course on investing in emerging markets at the London Institute of Banking in Finance. So please welcome Mark McNamee, and Mark is going to present the market outlook.
Great, thank you.
So
This, yeah. All right. Thank you, Andrew. So we're already starting a little bit late, so I'll try to be as brief as, well, for those of you who know Andrew and I, we both like to talk a lot, so I'll try to be as brief as possible. That might be impossible, but I'll do my best. And also there's a football match at 4 o'clock, so I don't want Ukrainian football hooligans attacking me at 4 o'clock. Alexei's already looking at me, I see. Okay, so 2024-25 outlook for the agenda, what we'll sort of run through. Again, connecting the macro to the micro. What's going on at the macro level globally, within the war, then what does it mean for business investors for the rest of the year? We'll go through the key takeaways, survey results also. So we have some of the results in, so it's at least representative of what's been going on in the market. Global macroeconomic outlook. The war, I'll give a very brief outlook this time compared to the last couple of events. And then market dynamics, what it means for the economy, what it means for business investors. So as far as the key takeaways, very, very briefly, global growth continues to be resilient, right? Similar growth last year as the year before, this year, and next year, around 3% or so. The point for Ukraine, why we care fundamentally, is its impact on oil prices, and we care about that because that is what is continuing the Russian engine of their economic engine and allowing them to continue to prosecute the war, unfortunately. So we'll get into oil dynamics because that's the critical issue for Ukraine. The positive news is that compared to where we were, the last event in March, we're in a better position. From speaking with military analysts that I'm in touch with, we're in a better position currently than we were, but there's a lot ahead of us for the rest of the year. Russia continues to enjoy a lot of advantages. Things are looking better. And things will continue to get better. They should get better based upon sort of current scenarios. The West, very positively, what we've seen over the last 6 years, as traumatic as things have been here in Ukraine, this has been quite important, in fact, in moving Western policy, particularly American policy, towards Russia. So we're moving towards this policy of containment, right? So that was the name of the strategy back during the Cold War the United States had against the Soviet Union. We're moving back towards that, which is critical for Ukraine's future. So I'll get into more details on that. And then unfortunately, we started to see at the beginning of the year, after the winter, so around March, April, we started to see economic sentiment and particularly consumer sentiment starting to build up again. And then unfortunately, we saw with the attacks on energy infrastructure, the power cuts, and then the tightening labor market from mobilization, a lot of pressure again coming, unfortunately, to the market. So we are seeing, again, another dip a bit in business sentiment. So we'll go through that here. Survey results. So this was comparing survey results we've taken just the last month to 2 months compared to what we saw in January, February. Q1, how confident are you that you'll hit your budgeted sales targets? And by the way, most companies surveyed were expecting growth in 2024 compared to last year. So a lot of confidence, actually. That was quite good to start the year. For the reasons I just mentioned, it does make sense. We have seen then some decline in sentiment since then. So you can take pictures, of course, but we'll send the slides to you as well afterwards. Looking at support from headquarters more positively, and this has been consistent from talking to clients since the start of the full-scale invasion. Headquarters, generally speaking, has been very, very supportive and continues to be supportive despite all the ups and downs, all the pressures, everything, supporting the business for the long term, the vast majority. So very positive to know that almost 2.5 years into the war with all the pressures. Very positive. And then about investing further. To be honest, I was quite surprised by this one. Too uncertain to know, that makes perfect sense. Most companies, it is too uncertain to know with a country at war. But by the end of this year, seeing over 20% of companies interested in investing further and investment guarantees. We have seen some progress in that area as well. So you're looking at almost half of companies interested in the next 6 months, maybe year, in trying to reinvest a bit further, which is very positive, again, considering all the pressures going on. Looking at the war outlook, again, similarly, when do you think the war will be over? Back in Q1, over half the market thinking around 2025. And then more recently, a delay, right? Things are pushed back a bit more, right? Makes perfect sense, of course. Would you support a land for peace deal today? This includes security guarantees from the West. Can just ask the room here today, who would support a land for peace deal, giving up land concessions, and you get security guarantees in return? Okay, interesting. That does not reflect what the survey shows. Most people, at least in private, right, filling this out anonymously, there is more support, actually, for a land for peace deal. Very vague.
What are we talking about giving up?
Current, more or less, current land that Russia would occupy more or less in return. It's an extremely difficult question. Of course, it's hard for Ukrainians to want to, of course, to agree to this. But the point is, 6 months ago when we asked this question, a year ago when we asked this question, there was really no support for some type of deal like this. Okay. Looking at the global outlook then, again, focusing on oil. So, I could talk about a lot of dynamics, US growth, Chinese growth, et cetera. But the whole point is oil prices are where Russia is vulnerable. The problem is oil prices are at fairly, historically speaking, fairly high levels, and Russia is able to get around the sanctions by and large. So they're able to keep up their budget revenues to support defense spending. Looking at the demand side, as mentioned, global demand for oil specifically, right? Global demand is going to remain generally consistent. Okay, so that gives some support to oil prices. And if you look, USA actually continues to exceed growth forecasts consistently. China's actually slowing, but this is keeping up demand, broadly speaking. Next year, China, US slow a bit, but then the EU markets and Japan should pick up a bit and compensate for some of that, keeping up global growth. The point here is that global growth should be relatively consistent. To get oil prices down, what to watch for, if we want to see pressure on Russia's economy, pressure on their defense spending, we have to look really at OPEC cuts and specifically Saudi's cuts, okay? So OPEC just did extend cuts through next year, and then also these voluntary cuts. So almost 6 million barrels per day. That's about 6% in total of global oil production. annually. Those production cuts, some of them coming down in the coming months, so we might see some pressure on oil prices in the coming months from that. We'll see what happens exactly. But Saudi is trying to keep up the prices. This is what is really saving Russia's economy and their ability to continue to spend, because Saudi is pushing up these prices for their own purposes, for their own development plans. And they need oil at basically $85 a barrel for that. Prices could come under pressure though, right? As mentioned, in the coming months, watch for that. Russia needs to sell their oil around 65 to 70 to be comfortable, right, with their continued extremely high defense spending. These are Brent crude prices. These are the forecasts. Russia's selling its oil, right, whether it's their Urals oil or their oil to China and India, roughly around $10 to $15 below this. So there's not a lot of pressure on Russia currently, but as we move into next year, more pressure picks up. Okay? This will be a common theme. And the whole point is Russia's going to start facing a lot more pressure, not really in the next 6 months, but in about 12 months from now. One of these areas of pressure comes from the oil prices. And so what we can watch for, dissent with OPEC, and then also the tighter financial sanctions, which we just saw. The US imposed tighter financial sanctions, which is quite important and having an impact already. And then greater compliance with the price cap, which unfortunately is not happening. But there is intention to do that. Russian labor market, the other area. If you want to see Russia come under financial economic pressure to actually change their calculus towards the war, it's looking at what happens with oil, and then domestically looking at what happens with the labor market, with the high inflation coming from the extremely high wage growth. These are real wages, 12, 13, 14% we're hitting. They're going to continue at this level for the next few months. In nominal terms, they're paying people over 20% higher than a year ago. And this can't stop because of their extremely high mobilization. Okay? This is causing problems, though, with driving up inflation, which is going to stay quite high the rest of this year, which pushes up interest rates further, 16%. They'll probably get to 18% in the next month or 2 months and stay there the rest of the year. This is really destroying private investment within the country. Again, in the next 6 months, this is not going to cause a catastrophe, but in a year from now, you start to see problems. Okay? So watching out, and then the impact of a weaker ruble from a combination of these factors. Okay, so that's what we have to sort of look for. That's sort of the economic story of where we can see pressures on Russia. On the political story, what's been critical, again, this first half of the year for Ukraine, of course, was devastating in terms of, numerous dynamics, slowing economy, the power cuts, what's happened to energy infrastructure, of course, the labor market, which we'll talk about. The point, though, is that this has scared the West quite adequately. And so now we're seeing very different rhetoric, an escalation in the rhetoric coming from the Western world, which is quite critical for the West to finally sort of embrace the correct political response towards Russia and help Ukraine win this war. Anyone have a guess who said this quite recently? For us, Ukraine is an existential issue. Who can seriously believe that Putin would stop there? Does anybody know? Macron, very good. Can you imagine a French president, France, which has been historically quite soft on Russia for since about the middle of the 19th century, okay? A French president saying this. It sounds like Ronald Reagan, not a French president, right? So Emmanuel Macron. Another surprising one. Who said this just about 10 days ago? If Russia does not agree. Very good. The Italian knows, of course. So an Italian who, when she was campaigning, everyone thought she would be too soft on Russia. She's populist, she's nationalist. She's been one of the strongest voices for Ukraine for the last couple of years now. So again, very good momentum. And then another surprising one. So I think that Vladimir Putin would continue to march through Europe if he were allowed to. Any guesses? This is one of the sorry? Nope. This is one of the few times I'm proud of US foreign policy in the last few months. Speaker Mike Johnson. This is the guy who was against Ukraine aid pretty strongly, actually, in 2023, beginning of this year. And he made this comment in April when the US approved the package. But the whole point is these things are absolutely critical to moving towards the correct policy which Ukraine needs in order to win the war. The West is getting it, is kind of the point. I'm going to draw an analogy because it's been painful watching this process of the West not understanding that you can't work with Putin, you can't work against Russian imperialism. We need to simply oppose and contain them, but this is a several years process. The whole point is this has happened before, specifically with the United States as well. Russia seeks security only in patient but deadly struggle for total destruction of a rival, never compromises with it, no permanent peaceful coexistence. Okay? The main element of any US policy must be that of long-term, patient, firm, vigilant containment. Okay, I doubt anyone here is going to know who did this, but this is sorry? Very good. Very nice, okay. And I know, he's an American historian fan, so very good, Chris, thank you. George Kennan, one of my personal idols, to be honest. He wrote this 1946, February 1946. At the time, you had the exact same dynamics going on in the United States that you do currently. After the war, a lot of people in America believed we can work with Stalin, we can work with the Soviet Union, we were allies with them during World War II, so maybe we can continue this after the war. There are a lot of voices saying we need to isolate ourselves from the rest of the world, forget the rest of the world, we have our big island in the United States, let's just be isolationist, like a lot of Republicans say today. Others are saying, forget Europe, forget Russia, let's focus on China. That's the real long-term threat. People were saying the exact same things in 1944, 1945, 1946 in the United States. Kennan saw this, understood it was insane. He was in Moscow, he was the deputy chief in Moscow in the embassy, and he wrote this called Long Telegram back to Washington, D.C. to tell them, you guys are crazy. You guys don't understand what's going on here. We need a policy of containment. You cannot work with Stalin's Soviet Union. There's no compromise. We need a firm, vigilant containment of Soviet Union. But if you compare these comments here with the comments of Maloney now, and Johnson even, and Macron, we're moving in the right direction. And you have to think 1946, it was only until 1949, the creation of NATO, and this real strong Western opposition towards Russia. So it's painful, but we went through a several years process back in the 40s. It's a several years process currently as well. So a return to the policy of containment, as mentioned, slowly moving to contain Russia. H1 was, of course, difficult, but the West got scared. That's what had to happen. And fortunately, the West now is scared, looking at what a Ukrainian defeat would be, what a Russian victory could be. So now, these policies, which 6 months ago or a year ago were unthinkable, hitting directly Russian territory with long-range missiles, sending military advisors, bilateral security deals, helping the domestic defense production here, etc. Tighter financial sanctions even. And then, most importantly, a year ago, Europe was saying we can't touch Russia's reserves. Now we're touching Russia's reserves. Okay, and this is the most important point because it proves to Putin he cannot outlast us. We'll get 50 billion from this, and I believe in 6 months from now, in a year from now, we're going to start talking more seriously about just taking all of Russia's underlying assets, the $300 billion, in which case we can continue this support for Ukraine for the long term and outlast Putin. So absolutely critical. It's critical because this policy of containment, this is what protected West Germany, brought West Germany into NATO. This is what protected and ended the war. It got an armistice in Korea, and now this is what's happening here with Ukraine. So we're going to get there, I believe, fundamentally, inevitably. It just takes time, and of course, it's an unfortunate, traumatic process. Okay, all of that said, Trump or Biden? So before I even start, every 3 months, I have to ask, so who thinks Trump's going to win? Wow, the minority, okay. And Biden? Most people, okay. Interesting. I hope you guys are right, the second people. He does have a narrow lead. The conviction doesn't seem to matter. Even more worrying is that it's about the swing states. There's only 6 states really that will decide the election. Trump is winning by a little bit in all of them. The other critical part is that in the United States, there's only about 10 or 12% of voters who don't know who they're currently voting for, right? Almost 90% of Americans knew 5 years ago, 3 years ago, who they're going to vote for, okay? So there's only about 10%. The other problem is, within that 10%, they are extremely, let's say, uneducated voters. So as an example, less than 40% of those swing voters were even familiar with the fact that Trump was convicted of criminal charges. Okay, so we're not necessarily working with a very highly educated voter base that can be convinced maybe one way or the other properly. So we'll see how this goes. The point, though, is that we still tend to believe, one, if Biden wins, he has a very good chance, the aid would continue and accelerate, most likely. And in the case of Trump, it's a wild card, it's unclear, but importantly, in April, he did not stand in the way. Right? He approved, he allowed that funding to go, plus his far-right supporters gave their approval as well, which is critical turn again. So I'm more and more optimistic that if Trump were elected, we actually could see a continuation of aid and even an acceleration, potentially, of aid, to basically reverse Biden's policy in a way. So we'll see. Still several months until the elections. As mentioned, Russia's window of opportunity is narrowing. It's losing its advantages every day. For Ukraine, very positively, we're catching back up. Mobilization has improved. Syrskyi said last month that more men were mobilized than in the previous 6 months combined. Also, we don't need the 500,000 that Zelensky said at the end of last year. That's more for offensive purposes. For defensive purposes, less than that. It's hard to know exactly what's needed. But moving in a better direction. Fortifications also, there's been a lot of reports of considerable progress, particularly in the last month. Fortifications. So again, these are the areas that have to be addressed. Manpower, fortifications, and then the Western aid, thankfully, just came through, as we mentioned, and then continued offensive actions in Crimea. Particularly when the jets come, Mirage jets at the end of the year, you could create a massive political problem for Putin by attacking Crimea and how he would be forced to respond. So that could maybe bring Russia to the negotiating table. So we'll see. But again, that's probably for another year until we have some maybe realistic negotiation talks. I won't go through all of this. I presented this the last couple of events. The change that I've made is actually more positive. It's hard to believe, I understand. But scenario 2 for Ukraine getting a land for peace deal, for one, more of the country seems to be a little bit more supportive of this compared to it 6 months ago or a year ago. So it might be politically palatable. And then secondly, getting that long-term support from the US in particular, but also the EU as well. So these moves are critical to increasing the likelihood of this scenario 2 and reducing the likelihoods of the other scenarios. Of course, watch out for Trump for scenario 1. He's a wild card. He doesn't have a Ukraine policy. He doesn't know, he doesn't care, to be perfectly honest. So it's very difficult to predict exactly how he would behave, but we tend to think he would actually be supportive of Ukraine. Okay. Any questions? I've been trying to talk as fast as possible. Good. Yes, please.
Can you elaborate on the Trump's policy about Ukraine? So how might
Yep.
how it might improve, for Ukraine. So if Trump comes to power, so what are the considerations and how exactly
Why?
it's
What,
gonna
sir?
work?
Why?
If Trump comes into power,
Yeah.
so how it might help Ukraine in the long run?
How
Like what
might it-
kind of policies would
Yeah,
they
so the point is that Trump himself, frankly, doesn't really care. He's a transactional president. He doesn't have a policy. What he would be dictated by would be what would be most supportive from his base, right? And what's critical, what happened in April, was seeing a number of members of his base, of the far right, actually supporting that deal, and specifically Mike Johnson and a number of Mike Johnson's allies. So that's what's absolutely critical. And then the fact that Trump didn't get in the way, and mainstream Republicans like Lindsey Graham helped also convince Trump, it seems, after his visit to Kyiv. It shows that Trump is open to that, and then he can campaign on that. He can also say, I'm going to do what Biden wouldn't do. Sure, I'll try to sit down and talk with Putin, but if that doesn't work, then we can overpower. And he said that specifically. He said, if Russia doesn't agree to our terms, then we'll overpower Russia, right? I'm not saying we know exactly what he'll do, but a year ago, for example, it would have been hard to believe that could have happened. Yes, Igor, I think you had a question.
Look, for now, Ukraine looks like not the only one hotspot on the map, and basically we do have observing like Middle East
Right.
Israel and so on. And I expect there are some few, more to come. And what, in your opinion, would be the direction of US? Would they have enough, let's say, focus or just willingness to continue support Ukraine?
Right. Yeah. So very good question. The question was, does the U.S. have the resources to manage all of these global crises going on at once, right? Including Ukraine, obviously. The short answer, there's two answers. The first answer is yes, they do. And yes, there's a lot going on. China and Taiwan, Israel, Gaza, obviously the war here, Sudan, Myanmar, Venezuela, Guyana. There's a number of things going on right now. But this isn't actually that terribly rare if you look at the last century, for example. In 1956, you had the Budapest Uprising, you had the Suez Crisis, the end of the British Empire. The U.S. is able to manage those very well. 61, you had the Berlin Wall going up, almost nuclear war. 62, the Cuban Missile Crisis, Kennedy shot the next year. So, I mean, you had a lot of things going on at that time. The U.S. managed that situation. At 79, you have the Soviet invasion of Afghanistan, Iran revolution, Taiwanese Straits crisis, crises all over the world, and the U.S. was able to manage all of it. So, sorry? South African War, yes. So, putting all these things together, the U.S. is able to manage those at that time. So, that part, having a lot of crises is not necessarily unique. What's unique right now is that we're going through a transitional period, right? With Russia, of course, but also with China and Taiwan. So you have multiple crises while the world, all the events I mentioned occurred within the context of the Cold War, right? We knew the overall dynamic. We knew a lot of the red lines at the time. Now we're moving into this unknown era. The rules are being written right now. So that's the problem, is having multiple crises while going through this transitional period. So that part is dangerous, which is why it's important we move towards this containment strategy, which is the right strategy for the right time under these conditions. Okay, I will try to finish this in about 3 minutes, I promise. So thank you, good questions. Moving to what it means then for the market, for market dynamics, for business investment here. Very briefly on the forecast summaries. Sorry, let me just highlight here if I can. Okay, so you can see, okay, yes. We reduced the GDP forecast alongside basically everybody else. The consensus has come down because of the power cuts, because of the labor shortages, so that's having a clear impact. Hryvnia depreciation, which is going to continue. Nothing dramatic, but we've also depreciated the hryvnia a bit. It's not really impacting inflation, fortunately, but it's moving in the wrong direction. Very quickly then, on the hryvnia, we're seeing, again, not dramatic, but continued depreciation. This will continue the rest of this year and into next year. And then wages, because of the mobilization, going up quite dramatically. This is supporting consumer spending, of course, but this is causing problems for businesses. However, businesses are reporting, the companies we've talked to and domestic surveys show, businesses are not pushing these costs onto higher prices, onto consumers as much. So businesses are absorbing a lot of these costs, and it's hurting their margins, but it is protecting consumers. So that's what you can kind of expect. Electricity prices, higher food prices. The harvest is expected to be a little bit weaker than last year, so food prices up a little bit also. What are companies saying? War for talent, every single meeting. This is the first thing we talk about, everybody. Yes, Ludmila, you'll have a lot of questions here on the panel. This is even with the power cuts for the last month, this is what companies continue to talk about, is the war for talent. Also, a sense of realism, which I think is actually healthy. A lot of companies, for example, this is a consultancy, said their business is tough, let's just stop lying about it anymore. Let's just be realistic and manage the situation as it is, right? Demand is okay, but much more uncertain because of energy, no surprise there. No plans to raise prices, as mentioned. That's not every single company, of course, but the majority are not looking to necessarily raise prices. The large global narratives, particularly for headquarters in the United States, but headquarters in Europe too. But headquarters in the United States is very much impacted by the headlines in the papers. And that's really, it doesn't, even when they talk to the Ukraine general manager, they don't come visit you, they're not here on the ground. and it's very hard to convince them that CNN isn't right, right, and that the Ukrainian general manager is. That said, still supportive, not necessarily reinvesting, but supportive of the business. And then the capital controls is a very nice sign. However, we're not seeing, so the end of the capital controls recently, we're not seeing a sharp revival of investment from this. The prolonged nature of the war, of course, the power cuts, that's still weighing on sentiment. So we're not seeing necessarily a pickup in investment because of that. Very positive. It should be helpful for the long run, but not quite yet. The power cuts, as mentioned, this is really hurting business sentiment. So we did see an uptick again, February, things coming back March, April, but then May. June's likely to be under 50 as well, unfortunately. And then looking at this new reality. I won't go through everything here. This will be the energy panel. Sorry. This will be the energy panel, but a lot of destruction. More than half of the electricity generation destroyed. And what are we going to do this winter? So this will be the focus of the second panel. A combination of importing electricity, importing parts, generators, green energy sources will be a topic we'll discuss as well. And then lastly, labor market pressures, which is the lead into our panel here. The question we asked, labor shortages from mobilization, discontinue services or products. So the good news is most companies know, but the bad news is almost 40%, over 40% of companies are actually cutting back on some of their offering as a result of the labor market pressures, which of course is a bit concerning. Where are we in 6 months with the continued pressure? And then lastly, what is the main way you're managing this? Retraining, automation, hiring more women. The point here, it's not just about raising pay. If you were at our last event, we discussed this as well. Companies have to get more dynamic and find different ways to keep and attract talent in this environment. And again, it's going to get tighter. Okay. Good. Well, thank you. This is also, I just want in honor of my mother who passed away a year and a half ago. But so I wouldn't be here on earth if it weren't for her. And she was my inspiration for moving to Ukraine and starting this company. So in honor of my mother. Thank you. Great. So with that, we can start the first panel. Sergey?
Yeah, thank you.